This is Lender Approvals. I'm James Vernon. In this tutorial, we answer the reddit.com question of why the bank won't take your cash. By the way, a small favor. If you like our content, like and comment and share this. Let's get started. So, you saved it. Every dollar. Maybe it took you years. Maybe you stayed disciplined when nobody around you did. You kept cash. Real cash. Which is crazy, in a good way. Yes. Now, you're finally ready to buy that property. Man, you did not even make it to the closing table. You got stopped at pre-approval, before the house, before the inspection, before any of it, because the first thing they asked for was bank statements, and your cash has no story they can read. They won't take it. Not because you're a criminal, not because the money is dirty, but because in the mortgage world, cash with no paper trail does not exist. It literally does not count. So here's what we're doing today. First, every reason banks reject cash, the full list. Then exactly how to fix it, the legal way, the way that makes banks compete to approve you. If someone sent you this, they're looking out for you. Stay to the end. Let's go through every reason and really hear these, because each one is a wall between you and your property. They are not trying to make things harder for you. They simply have to follow certain regulations. Reason 1. No paper trail. When you apply, the underwriter doesn't take your word for it. They pull 60 to 90 days of statements and examine every deposit. Cash sitting in your house has no origin story they can verify. No wire, no check number, no pay stub. It appears like it fell from the sky. They cannot approve what they cannot explain. Are understanding this so far? Reason 2. Federal law watches every cash deposit. Deposit $10,000 or more in cash, and the bank is legally required to file a currency transaction report with the government. Not a policy. Federal law, under the Bank Secrecy Act. It goes to FinCEN. Your deposit is now in a federal database, and underwriters see and flag it immediately. Reason 3. Breaking it up makes it worse, so you get clever. 9,000 here, 8,000 there, stay under the radar. That's called structuring, and it's a federal crime. Same law, same agency, penalties up to 5 years, even if the money is clean. What the is going on with these laws, right? Compliance software is built to spot the pattern. You won't outsmart it, you'll only make it worse. Reason 4. The guidelines were never built for cash. Fannie Mae and Freddie Mac set the rules most lenders follow, and they're explicit. Every dollar of your down payment must be sourced and seasoned. Sourced means documented origin. Seasoned means sitting in a verified account, 60 days minimum, often 90. Cash from a mattress satisfies neither. Reason 5. Every large deposit triggers a letter of explanation. Even under the federal threshold, underwriters must question any deposit that isn't clearly payroll or a recurring transfer. You'll get a request to explain, in writing, where it came from, with documentation. If you can't document it, they can't approve it. Good intentions are not evidence. Reason 6. Even gifted cash doesn't work. A relative helping with the down payment is allowed, with documentation, but the gift has to arrive as a check or wire, with a signed gift letter on the lender's form. An envelope of cash at Thanksgiving just looks like another unexplained deposit. The source has to be traceable end to end, paper to paper. Reason 7. Time is part of the requirement. Even if you deposit today and document every dollar, it isn't usable yet. The seasoning clock starts the moment it lands. 60 days minimum, often 90, sometimes 6 months. You can't rush it. The best time to start was 3 months ago. The second best time is right now. Reason 8. The wrong account compounds the problem. Drop a large sum into a checking account that already has overdrafts and late history, and you've just given the underwriter more to question. The account receiving your funds has to be clean, consistent inflows, no overdrafts, no surprises. The account tells a story, and that story needs to be boring in the best possible way. Reason 9. A denial isn't your only risk. Large undocumented cash can trigger IRS scrutiny on its own. If it's income that was never reported, now you've got a tax problem stacked on a mortgage problem. Businesses report cash over $10,000 on Form 8300. Banks report too. The systems share data, and inconsistent patterns invite questions that have nothing to do with your house. Reason 10. And this is the one that matters most. The bank doesn't think you're a bad person. The system runs on one principle. Every dollar must be traceable from source to closing table. It doesn't matter how honest you are or how hard you worked. If it can't be documented, it can't be approved. That's not cruelty, that's the architecture. Once you see it, you stop fighting it and start building inside it. So now you know why. And that's the most important part, because most people waste months fighting a system they don't understand. You won't. You're going to build the structure banks are trained to approve. Step 1. Fix your personal credit first. Your score is the first filter every lender runs, before income, before assets, before the down payment. Pull all 3 bureaus. Hunt 4 things. Errors, which show up on 1 in 5 reports. Collections and charge-offs you can dispute or negotiate. Utilization over 30%, which is quietly killing your score. And inquiries you don't recognize. Don't apply for anything new. You're not borrowing right now. You're building. Step 2. Form your LLC. This is your borrowing entity, the line between your personal history and your investment activity. File your articles of organization with your Secretary of State. $50 to $200, under a week. Get your EIN free at irs.gov in 15 minutes. Keep the name professional. Get a simple operating agreement on file. You're a business entity now, and that changes how lenders see you. Step 3. Open a dedicated business account in the LLC's name. Not personal, not a fintech app, a real business checking account. This is where your cash enters legally. Deposit it, document the source, keep consistent deposits over time instead of one lump sum. Then wait, 90 days minimum. No overdrafts, no unexplained withdrawals. Pay your business expenses from it so it shows activity. You're writing the most boring, responsible, clean story ever told. Boring is your brand. Step 4. Fund the LLC through documented channels going forward. Checks, wires, ACH. Every dollar with a paper origin. Transfer from your personal account with a memo. Member contribution, owner deposit. Those words make an underwriter's job easy, and that's exactly what you want. Build 6 months of history before you apply. When the lender pulls your statements, they should see a company that runs clean. You're not rushing to the deal. You're building the borrower who gets the deal approved. So here's something tangible to walk away with. I put together a free guide, From Bad Credit to Bankable, the 6 steps to buy your first property the way banks want to see it. It goes deeper on everything we covered in the exact order. It's completely free. Links in the description. Use it. And if you know somebody sitting on cash wondering why the bank keeps saying no, send them this. It could change their timeline. See you in the next video.